Main London-listed Critical Metals is a small-cap company which is a copper producer. It's one of the smallest copper producers that is around in the markets at the moment. Chief Executive is Russell Fryer. He joins us now with some more details. And indeed, this is an interesting time to speak to you because you've just been talking about a transformative 6 months. It has been a stunning change. You've gone off market, you've come back to market. As I say, you've started production. You are motoring ahead on all fronts. What's the highlights so far as you're concerned?
Well, the highlights, we readmitted about the 28th of September 2022, and we owned 57% of this mine in the Congo, and we turned around and raised some money in December to buy out the minorities at a PE of 0.3. So it was highly earnings accretive when we raised this money in December. The third week of January, we started first production. It happened to coincide with the rain season in the Congo. The rains just stopped last week. So now all that ore that we've stockpiled, we will put into the market for sale here in the next 30 days or so after we rehabilitate the road, which starts next week.
What sort of production are we talking about here? How much is going through and how much potential is there?
So at its steady state, it'll be 10,000 tons of oxide copper ore, roughly about 3 to 4% per month. So I've guided to the market in January to 120,000 tons of oxide ore. But what I haven't said until today is we're getting ready to pivot to the sulfide ore, which is a much higher grade. It's 10% or so. So we'll start to dewater the pits in the next couple of weeks or so, which will allow us access to the sulfide higher grade ore bodies. And that should increase our earnings by roughly 3-4 times.
I was going to say, so what has the effect of bringing costs down?
Oh, very much so. So you can actually produce 50% less, so 5,000 tons, and still have earnings 3 times greater than what you've got at the market for.
Right, okay. How long is it going to take to get there? What sort of cost are you looking at to get you to that point?
So we've set aside $50,000 for the dewatering of the pit. Right. We will hire an explosives expert because we'll need to explode the higher density rock, which is a sulfide ore. We already have the faces that are open, that are underwater right now. And so we should be in production 60, 90 days in the sulfide ore in conjunction with the oxide ores.
That hardly dents the 1.8 million you just got on the balance sheet because of the recent deal you've done. I mean, there's a lot of money sitting there. What are you going to use that money for? So
we're using it to ramp up production. We're using it to rehabilitate the roads. We've gone from 0 employees to 32 employees. So we need to hire 1 or 2 more geologists and consulting geologists. And then we're going to start drilling after our geotechnical and geophysics mapping is completed. We started that this week. That'll take roughly 30 days or so. And then we'll have our drill pads prepped and ready to go. Once we drill, we'll be able to put out a JORC report.
Yeah. Let's talk a little bit more about the mine and precisely where it is. It's in the Congo, but what's the environment like? Who are you working with? What's the neighborhood like around there?
So we've got 5 to 6 different buyers of our material, of our ore, not only our copper ore, but hopefully our cobalt ore that comes in the future. We're 98 kilometers outside, north of Lubumbashi, so we're in the right area. There's all sorts of other copper mines around the area, and there's all sorts of copper processing plants that are both being utilized and are also under care and maintenance.
So we're talking here about it's the Molulu mine, isn't it,
yes.
in Congo? Talk to us about ESG. Talk to us about the sort of attitude you're taking towards this, because it is such a big topic at the moment.
Yeah, absolutely. So we very much believe in an ethical and very transparent mining practice. So for example, when we started this journey at Molulu, we had no workers. We've got 32 workers, of which 30 of the 32 are all Congolese nationals. We know the ages, we know the tax IDs, we know the addresses of everybody. So we want to make sure and send a clear market that if you adhere to Western practices, you can actually make sure that you're hiring adults, and then you can help with the families, you can help with education, and you can obviously help with their salaries and such. So we're actually pretty proud of the 32 employees that we have. And we make sure that we have no child labor, and it's an open pit, right? So we're going to open pit this, which means there's no underground issues, no hanging wall failures and such, like you see in other parts of the Congo or indeed in other parts of the world.
Which of course goes back to what I was saying about the fact it's relatively expensive to mine, which is all goes towards this bottom line, of course, of the company. The other part of ESG is the environmental side of it, the impact, the footprint, the carbon footprint. Are you being persuaded to do things differently than you would have done in the past about mining? Because now we're looking at renewables, trying to get the stuff out of the ground in a more environmentally friendly way. Is that something
Yes.
you're occupied by?
Yes. So we actually have solar panels that power the camp in the evening. But what I've done is I've got a hold of a Belgian firm that does hydropower generation. So one of the tasks I'm going down for a month, for the month of May, I'm going to go and do some flow studies on the river and the stream that's on our lease area. And hopefully we can put some type of hydro dam or hydro generation unit there that would allow us to power the region or the area that we're in 24 hours a day, 7 days a week at no cost and obviously zero carbon footprint.
Yeah, let's take a look at the share price chart, because this goes back to September last year. And you can give some context about this, about what happened in September last year. We saw this big ramp up to the highs that we had back at the back end of last year. Since then, it's fair to say it's been in this fairly sort of narrow band between 23 and 29 pence a share. 15.2 million. I said at the top, actually, you're one of the smallest producers, aren't you, of copper, I think, or any mineral on the London market, which is a tribute. But in fact, does that tell us more, or should that tell us more about the share price as much as anything?
Well, what that tells me right now is we've been a consistent performer on the market. We're not lagging the market in any way relative to the other copper producers. But what's interesting about that chart is it doesn't reflect in my head when I do the financials at the advantageous acquisition price that we've done at PEs of less than 1. So at steady state, we're definitely trading at the PE of less than 1, which means that share price chart is undervalued. Okay.
I'm bound to say that all CEOs would say that, but you've obviously got the numbers to back that up.
Correct.
In where you're going. Just talk to us a little bit more about where the share price should be based on what you're producing and the fact your costs are going to come down when you go into this new phase of mining. Any idea as to what you think the share price? You're a 20% shareholder. You have an interest in this.
Oh, yes. I'm very much aligned with the shareholders and have purchased every share and participated in every placement. I think what this chart tells me is that the market's waiting for news. And what they really want to see is they want to see first sales. They know we're in production. They know there's a stockpile. They want to say, hey, have you sold $500,000 worth of stock, and to whom? And so I'm going down Friday night, tomorrow night, to the Congo to meet with the 5 potential buyers to sign an offtake agreement, and we'll make that announcement in due course, along with the road and along with the geotechnical and geophysics mapping that we're doing.
Okay, my last question was going to be what's going to happen. So that clearly got your next few weeks defined. Rest of the year, were you just going to? What are you talking to? You're talking to shareholders? I mean, you don't have many retail shareholders on, I don't think.
We've got a lot of retail. We don't have institutional yet, but we trade a lot. We trade a lot. We trade between 100 and 125,000 pounds per day of shares.
Right, okay.
But our pipeline for the next 60 days is incredibly full. So we'll talk about the road rehabilitation and announce when the first sales come. We'll announce some geotechnical results. We'll announce the drilling. We'll announce first sales and receipt of capital. We'll announce the drilling is ended, and I'll release some drill results that are 100 meters or 50 meters. We will put out the JORC report, and hopefully, with a bit of luck, we might have an M&A transaction announced.
Okay, that sounds interesting.
Yes,
do let us know when that happens and what's going on.
I will do. Thank you for having me.
Thank you indeed for your time. It's Russell Fryer. It's the Chief Executive of Critical Metals. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.